The market's selling up because, again, I talked about in Thursday's video that, again, coming out saying there's no hurry to cut interest rates. Now second guessing himself. Maybe it's because of the election. Everybody's expecting this boom from President Trump's economic policies. Wall Street, Trump's policies on the economy. A lot of speculation there. Maybe it's because of the rising yields, which I'll talk about. Rising because of that same speculation and because of huge amount of deficit spending and bond market saying, hey, maybe that's going to continue, and inflation rears its ugly head because of the potential boom with economic policies. These are the things that the market is expecting when we're likely about to get recession, usher in a bear market. Got Powell second guessing himself for whatever reason, whether the election, whether the the bond market or the report or whatever. Fed is making a monetary policy mistake about inflation when they should be worried about the recession. It's like in 2007. They were blindsided by the inflation, telling us it was transitory. Now they're being blindsided by the recession, saying there's no hurry. Economy's on a solid footing. There's no hurry to cut. They should be cutting aggressively right now because we're about to move into recession. The Fed is making a monetary policy mistake once again. Blindsided by the inflation, they're now blindsided by the recession. That's why we had the sell-off. NASDAQ coming down below the 20 period, moving back to the trend line right here, excluding the shadow. If we include the shadow, again, it's a little bit lower. NASDAQ turning off of this trend line right here. Again, full NASDAQ has peaked. If we form a divergence with the S&P, I think the S&P probably still going to go up and reach the trend line in the monthly time frame. But NASDAQ's reached the one in the weekly time frame. I don't know if it'll reach the one in the monthly. Again, I'm watching for clues. I have a gap to be paying attention to. Remember, back at the July peak, NASDAQ made a lower high. The S&P made a higher high. So again, we'll be watching. Do we get a divergence between them again once we get a final peak? I want you to watch the next video because, again, the momentum signals began to turn on Thursday after I told you we were going to sell off on Friday and Monday at those highs. I told you, again, in this trend line on NASDAQ, told you I didn't know if it'd be a deep pullback or a shallow pullback. But yesterday I knew because my signals were momentum signals were turning bearish, which, again, I'll show you next update. So you want to see those charts. Watching the rising wedge here, and again, do we get a lower high in NASDAQ or a higher high? That's why the big sell-off. We sold off 502 points. We sold off nearly 2.5%, and we were down over 2.5% at the lows here on NASDAQ. We've come back to beyond gap support, and we've moved back here towards the gap fill area here in our trend line of support. Try to bounce surrounding this trend line and the gap fill area. S&P came down to gap support, and the 20 period, NASDAQ took out the 20 period, it took out the gap support area. S&P is at it. So again, a gap down. The S&P was down 1.32%, 78 points or so, and over 1% at the lows. Again, now we have to be watching. Is a gap and go? Is it a gap and fill or a gap and trap? Here we had a gap and trap with the lower to the 50 period moving average. We gapped down, and then we moved in the other direction. Here we had a gap and go. We gapped down, and we began to move in the direction of the gap. We had a gap fill where we gapped down after this counter trend right here. We gapped down, but then went back, filled the gap, and resumed the decline. A gap and go, a gap and fill, a gap and trap. Which will this be? We'll be watching. But again, I do believe we're in a topping process. You still have the possibility of a divergence. I'll be talking more about that later. But back to the gap higher on the presidential election results, which again, told you about this bottom, the 50 period horizontal support. Told you to expect a rally. We got it. Watch the trend lines, and if we moved above them, we can move to new highs. And if we back tested the first break of the trend line, we would move to a new high. With my target level, 6,000 area, mid 6,000 area or so on the monthly chart. Overthrow it, we can move into the 6,100 range, that area there. Low to mid to high 6,100 area. If we overthrow it, we stop making new highs and fall short of it. We'll need to see evidence of top. Don't have that yet. Divergences in the weekly time frame. I still think, again, we could reach higher levels towards my target and form a divergence here on the RSI. have to reach the trend line in the monthly time frame, but we're likely going to. Again, looking for clues of a topping process here. That's why the market sold off today. We saw the yield jump, got a topping tail though. If it starts to reverse, the S&P could be right behind it. With the market gapping down sharply, selling off, as Powell said, there's no hurry to cut interest rates. They're on his Thursday speech followed by the Q&A. The nothing's going to happen crowd, the herd. They're telling us, recession, we're going to have a soft landing. That's the Kool-Aid that the media, the financial media tells us, and that's the Kool-Aid that the Fed is dishing out. Every time, herd, or the retail investors, every time they believe it, and every time we have a recession. Here's why the Fed's making a monetary policy mistake. Now, the herd tells us, well, there's no recession in sight. The unemployment rate's low. We have job creation. No signs of a recession. Poppycock. What the Fed should be doing. I'm just a trader. I'm not an economist. But yet, I read and study economic data and look at the different reports. And if I could see this, the Fed should see this plainly. Don't. The Fed is too busy focusing on inflation, rates elevated, start raising them. They raised them too late. Now they're being blindsided and not seeing the recession on the horizon, completely oblivious. Another monetary policy mistake, in my opinion. They're worried about inflation rather than seeing the deterioration in the labor market. I have the jobs with the revisions. The first 10 months of 2023, we came in at over 2.5 million jobs. Okay, in the first 10 months of 2023. In the first 10 months of 2024, we just got last report for October. So this is up from January to October, 2.5 million jobs. From January 2024 to October, 1.7 million jobs. But from 2023 to 2024, we've seen a deterioration in the labor market by 838,000 fewer jobs created in the first 10 months of 2024 than the previous year. Meanwhile, we've seen the Psalm rule triggered, a reliable indicator that is a 3-month moving average of employment rate, and when it rises by 0.5% above the low from the last 12 months, it triggers a recession. It's going to happen, and we've seen it be correct over and over again. We saw it in 2000, 2008, 2001, and again, these were associated with market tops, the 2000 top, the 2007 top, just before the recession took place. 1990s and 1980s, and we can go back, and again, it's correctly predicted the recessions that are coming. It's already predicting one right now. The self-imposed shutdown of the economy during the pandemic, Psalm rule being triggered, and the recession that followed. Again, it was followed, the Psalm rule being triggered, followed by weakness in the labor market, the recession showing up, and again, the market eventually topping and beginning a reversal to begin to price in a recession, ushering in a bear market. This is something Powell's dismissing right now. It's not been wrong. It's not going to be wrong. We're seeing the recession indicators flash, suggesting, about 6 months, maybe a little bit less, 3 months, maybe a little bit more, 9 months, but somewhere in there, we're going to see a recession hit. For that recession, the market's going to top and begin to price it in. Going to start lowering rates, which they're already doing. They're in denial now, believing their own narrative at this point about this soft landing nonsense. Now, just going back to this chart real fast again, we've seen 838,000 fewer jobs this year in 2024 in the first 10 months and the previous 10 months of 2023. This number that we got due to union strikes and hurricanes, again, this is likely going to be revised down to a negative number. This 12,000 that we just got with their last report, that back at the time, not only did we see fewer jobs created by 838,000 fewer jobs in 2024 in the first 10 months, but we've also seen the overestimating, and again, these numbers are unreliable, at a much bigger number, March of 2023 to March of 2024, 118,000, and then all of a sudden when this starts getting reported and start calling the Labor Department on their bogus numbers, all of a sudden the revisions happen upward. The number comes way down. Lipstick on a pig as best they can. Even with their accounting tricks, we still have an overestimated 549,000 jobs here, January 2023, and the bulk of it is in 2024. 2024, we've had 402,000 in revisions just in the last 10 months alone. They've overestimated by over 400,000 jobs just this year since the start of 2024 in the last 10 months of these reports. Again, now the Fed is showing concern, saying, oh, we're no hurry to cut rates. And again, a lot of that is being based on a bogus number that, again, is completely unreliable. When this report came out, the September jobs report came out in early October, everybody starts going, why does the Fed need to cut? Why are they cutting? All the experts come out and tell us the Fed is cutting when we have this really, really strong economy based on fake numbers. I'm telling you, mark my words, we're going to see negative numbers. October report very well could be already a negative number once revised downward, but if it's not, again, it will show up ahead of the recession. I believe the Fed is making a monetary policy mistake. Herd and the bond market all believe we're going to have this booming economy and inflation is now going to start going again because of Trump's reelection implementing economic policies. So again, likely going to be like 2000. Everybody, when George W. Bush got elected in 2000, everybody believed it's going to be this big economic boom. You know, George W. Bush, he was talking about the tax cuts. He was doing it, the market, he was talking about all these reforms, and as he was doing it, the market was going down. Bounced on when the tax cuts got passed, and then they collapsed even further. They already had warning signs that the recession was coming. Don't get me wrong, the tax cuts can help the economy, but it was too late. The bursting of the tech bubble and then 9/11 and all these things happening as we were moving into recession. This is very, very similar to that. Before President Bush ever took his office there in the White House, the market had already peaked and started moving lower. We'll likely see the same thing with President Trump. President George W. Bush was coming into office. We were coming off the dot-com bubble. Strong economic data, just like we do now. The unemployment rate, even though I'm showing you, under the hood here, employment rate is still relatively low. Still job creation, showing you, hey, behind the scenes, we're clearly seeing the labor market begin to weaken. Time right now we have with President Trump coming into office, everybody believing, oh, it's going to be this big economic boom and we're going to go. And that's exactly what they had. And a lot of it, again, surrounding the economic policies with the tax cuts, tax policies that he's been talking about. It was the same thing back in 2000 with George W. Bush. It didn't stop the recession from happening. It didn't stop the bear market. Even though some of these tax policies may be good, they'll take time to implement. Not going to stop the recession. That's what you have to understand. You got the Fed second-guessing themselves about the rate cuts. The 10-year Treasury yield soars. There's some people saying the Fed is taking cutting rates based on a fake number with the jobs report. Why the sell-off? Because the 10-year Treasury note yield jumps back up for the Friday session on Powell's comments on Thursday, but it ended with a topping tail in the form of what looks to be a gravestone doji or copy gravestone doji. Oftentimes you want to get the cross a little bit lower, but again, still qualifies. A similar pattern right here that is now forming bearish diversions on the MACD and the RSI. So again, I do believe that the 10-year is in a topping process. It's going to turn back down. It's at some major trend lines. It's overthrowing this one right here. Talking about the 10-year because again, today we had the volatility because the 10-year spiked, but then it came back down. That previously, where we got the presidential election rally, we got that volatility surrounding the surge that we had with the 10-year back over here, and we had that volatility over here from the mid-October. I do believe the 10-year yield is going to go down, and eventually the S&P will follow it. Zoom out, you can see the trend lines I'm watching. We looked at this one on the other chart. We're overthrowing that one, but we're coming up to this trend line right here, and we're stalling at it. We tried to get above it for 2 sessions, Thursday and Friday, and we turned down off of it. And we got a topping tail both of those sessions. So again, I think we'll end up coming back down eventually, but we still may flirt with this area until those divergences on the MACD and the RSI begin to play out. As a 10-year rising because of Powell's comments on Thursday. Powell said, and I talked about this in my video towards the end of the video yesterday, great length and detail. Powell said that the Fed doesn't need to be in a hurry to reduce interest rates. Again, I warned you about this long ago. The fake jobs report number in October. Told you back then and several times since then that, again, one of the narratives that are going to be out there, the Fed has now made a mistake cutting in September by 50 basis points and now, again, doing another 25 basis point cut at their last meeting. The narrative is going to be, oh, inflation's going to surge, the Fed's making a mistake. I told you with that narrative, there's going to be volatility in the market because the market is going to go, we're going to get fewer cuts out of the Fed, and that would rattle the stock market. So what I've warned you about is now happening. I talked about this at great length and detail many occasions. The Fed, in my opinion, is making a monetary policy mistake. Just like the Fed told us, inflation is transitory. No need to rush and raise rates. They're doing the opposite. We've had rates elevated. They're telling us there's no hurry to lower the rates when they should be lowering the rates. The recession is about to happen. The Fed is blind to the inflation, currently are blind, I should say, to the recession that's coming. I said before, the Fed's got to know a recession's coming. I take it back. They keep saying, oh no, we're going to have this soft landing. I think they're starting to believe their own narrative that, oh, we're going to have this soft landing. You say something often enough, you start believing it. And I having to come to the conclusion that the Fed has now convinced themselves that we're going to have this soft landing and everything's going to be A-OK. It's like they tried to convince us that inflation wasn't going to be an issue when they caused it. Why did they cause it? QE, infinity and beyond. That's inflationary. But the government enabled the government to do what they did by buying the treasuries, by the way, but the government passed out $6 trillion in checks. That was inflationary. They were trying to help, or they said they were trying to help people during the pandemic, the self-imposed shutdown of the economy. What did they do? They created inflation. How did they create inflation? You're shutting down the economy. Other countries shut down their economies. We have supply chain disruptions. What do? They pass out checks to everybody, hoping that money will be spent, avoid an economic downturn. And what happens? You got supply chain disruptions. So the availability of things has greatly been reduced. You got all this money being thrown at it. And that created the inflation. Fed and the government created this problem. The Fed's policies lead to negative outcomes, always. But you have the shutting down of the economy, the U.S. economy, and other economies in other parts of the world. The unemployment rate spikes. There's all these layoffs with the pandemic, and the economy comes to a screeching halt as far as the labor market is concerned. And then you give everybody a check, everybody ready to spend money, but yet you have businesses downsizing and producing less. That has given us this inflation. Thursday, Powell was trying to take credit and said, oh, we acted. Let me rephrase that. He said, we responded powerfully. No, it was as forcibly. We responded forcibly to inflation. Yeah, after they told us that it was transitory, rising towards 9%, finally the Fed figured it out. And they're making another, just like they made a monetary policy mistake back then, they're making one now. We have a recession. They should be slashing rates right now. They're too busy worried about inflation. And that's why Powell's coming out saying this. They're making another monetary policy mistake. Blindsided, recession. Before, Powell sees a recession and he just can't say it. It'll rattle markets. Well, I'm becoming convinced that they're starting to believe their own fairy tales about this soft landing nonsense. We have a recession. The recession indicators have already flashed. I talked about the Psalm rule being triggered with the unemployment rate. What does Powell do? Dismisses it. Becoming more and more convinced that the Fed is now making another monetary policy mistake, just like they did telling us that inflation was transitory. Now, again, this is the sell-off. I told you yesterday, again, we are going to get a bigger sell-off because we had the warning signs with my indicators. At the top, we are going to have a pullback. I told you I didn't know if it'd be big or if it'd be small, but yesterday my signals warned me it was going to be bigger, and I warned you. It did amaze me that the Fed, Powell yesterday, they were trying to take credit that, they acted forcibly to the inflation. They were completely blindsided to and didn't react to it until after it was too late. Right now, we're about to have a recession. We're still going to have it, but they could make it a little bit less painful if they would stop worrying about inflation right now and start worrying about recession that's about to happen. Don't get me wrong. We're going to have another inflation problem, but not now, later. Right now, we're going to see the deflationary forces take over. The recession is going to resolve the inflation problem now because we're going to have it. We're going to have another battle with inflation later, but not now. So don't get me wrong about inflation. More problems with inflation later because the politicians are spending us into economic chaos. Eventually, this is going to create a huge problem. Let me just say this about the Fed. Look, let me just say, again, the Fed funds rate, the Fed, they control short-term rates. Long-term rates are set in the marketplace. What Powell is saying now, again, that there's no hurry to keep cutting rates, is second-guessing himself. The rise of the 10-year yield is likely doing that? Or, the Fed's making a mistake on some fake jobs number that we got at the beginning of October, and then the election. Trump won the election, and so I think Powell could be second-guessing himself. Because now everybody's expecting this economic boom, and Trump is going to inherit a recession. Recession indicators are already flashing. The only reason why we haven't had it is because record amounts of deficit spending going on right now, artificially propping up the economy. Trump's going to inherit a recession. It's going to happen. It's like George W. Bush. He inherited a recession at the very beginning of his term. Even though, again, there was a lot of excitement about the tax policies of George Bush, just like there is right now with President Trump's economic policies. No tax on tips, no tax on Social Security, no tax on... And this is going to create an economic boom. The extension of the tax cuts, deregulation, favorable tax policy for businesses, and so on and so forth. Again, while this may help later, Donald Trump is still going to inherit a recession. Powell may be second-guessing himself because everybody believes there's going to now be this economic boom, have huge warning signs, huge red flags. The market is extremely overpriced, like the Buffett indicator, market cap to GDP being at 200%. We're at the highest levels in history here, only second to the 2022 top. Maybe Powell's second-guessing himself because of the election now, because of the surge in the yields. Part of the reason why they're surging is because everybody thinks there's going to be this huge surge, or I should say huge boom in the economy, which could lead to higher rates, which could lead to higher inflation. I believe, again, deficit spending is going to continue, and it's also adding to in the 10-year yield. But again, I'm wondering if the election isn't causing Powell to be another reason why he's second-guessing himself that we're in no hurry to keep raising rates. Should be in a hurry because a recession is about to happen. Ever since the Fed has started cutting rates in September, the 10-year Treasury has been going up. The Fed sets short-term rates. The only one that has a say in it. The bond market has a say in it too. So we've seen the 10-year Treasury note yield rise back up to these levels. Ever since the Fed has started cutting, it is probably saying, hey, no rush to cut. There's no hurry to cut. Give themselves a way out in case they decide to pause their rate-cutting campaign. Now, why is the 10-year Treasury going up? Two things. Spending in Washington, D.C. Right before the election, we're now spending more money than any other year. That has delayed the recession. Right now we're at over $7 trillion. The other reason is, again, bond market is anticipating an economic boom, could create further inflation under President Trump. The market we're anticipating, Wall Street was hoping for President Trump the election. Why? Because Wall Street likes President Trump's economic policies. The conventional wisdom right now is, hey, Donald Trump's going to back into to the White House, and we're going to see this economic boom. That's the conventional wisdom right now. That's what the bond market is thinking. The Fed is second guessing themselves now, saying, hey, we're in no rush we're in no hurry to cut rates. So the 10-year Treasury note yield is rising because of anticipation of continued deficit spending. Also on the expectation that there's going to be growth and more inflation along with that, with President Trump returning to the White House in a second term. That's why we are seeing the 10-year yield rise on these expectations. The deficit spending is going to be down. We're spending more money than any other time in history. We just hit $36 trillion, running a budget deficit of $2 trillion in 1 year. Over $7 trillion this year alone. That's going to change. This is what, people go, oh, we haven't had the recession yet. This is why. Recession year, and we've had all this spending going on right before. And again, with the jobs report, if you read the jobs report, you'll know that a good majority of the jobs that are being created, which are less jobs than the previous year, are government jobs. So this is just artificially propping up the economy. We're about to have a recession. The market believes President Trump's policies are going to give us an economic boom. Very well could, but after the recession, policies will take time to implement. They cannot stop the recession that we're about to have. Why we haven't had it is because of this, and this is going to be greatly reduced. Seen Elon Musk's post? He was just appointed to what's going to be the newly created Department of Government Efficiency. Elon Musk is talking about slashing $2 trillion of wasteful government spending. Spending is likely going to be greatly reduced, currently artificially propping up the economy right now. Wall Street likes President Trump's economic policies, but I'm just telling you, policies are going to take time to be implemented. They may help reduce or shorten the recession, or at least make it less painful. He's talking about extending the tax cuts, deregulation, no tax on tips, no tax on overtime, no tax on Social Security. These are things that can help the economy. Not going to stop the recession that's already coming at us like a freight train. These economic policies may give us a boom later during President Trump's term, but he's going to inherit a recession at the beginning of his first term or his second term here that is going to be revealed in 2025. People will see it.